This is your LMAX exchange technical update for Thursday, October 19th, 2017. Euro dollar. So the euro continues to show signs of potentially putting in a major top in 2017 with the possible formation of a head and shoulders top here that would expose a drop all the way down into the 112 area. But first things first, the market would need to establish back below a neckline which comes in around 116.60, which is that August low. It also happens to coincide with the 100-day moving average in the bottom of the Ichimoku cloud, and so it's clear there is a lot of support that would need to be taken out in the 116s for the market to have a shot at breaking down and putting in that top, exposing 112. If the market is unable to establish back below 116.60, it would suggest that this is not a head and shoulders top and more of a bullish consolidation ahead of a continuation of gains in 2017 back above that recent 2017 high that was seen on the 8th of September at 2093 and up above, exposing a move towards the 125 handle. And so we're at a critical inflection point here with the euro. Key levels to watch over the coming sessions below 116.60, and on the top side you want to pay attention to that recent high which came in at around 118.80. Sterling dollar. So cable has been confined to some more choppy trade over the past few sessions. The market had seen a sharp pullback from the 2017 high at 136.60, but was well supported on a dip down ahead of 130. And since then, really a little bit of a grind higher, but not really going anywhere. Overall, the medium-term outlook here favors the top side after the market had broken out above 127.75 earlier this year to suggest that a longer-term base was in place by that October 2016 plus 30-year low that was down in the 118s. And so if we do see setbacks over the coming sessions, they should be very well supported. Even if we see a dip below 130, we don't expect the market to sustain any significant weakness below that level with that 127.75 area to hold setbacks and for the market to eventually put in a higher low or a next low of some form ahead of the next major upside extension beyond 136.60 and towards and through 140 further up. Dollar yen. So dollar yen has seen a little bit of a bounce in recent trade, but overall we're not really anywhere at the moment with the market having recently shown signs of stalling out above 113 but not quite getting up to the range highs that have capped gains this year for the most part up towards and above 114 into the 114.50 area. At this point, a break and close back above 113.44, recent high, would expose a direct retest of those range highs up around 114.50, while at the same time a breakdown back below recent support, which comes in at 111.65, would suggest that the market is looking to top out here and head even lower below 111, all the way back down towards those range lows and the yearly low at 107.32 that was set just back in the month of September. Euro Swiss. Euro Swiss has mostly been grinding sideways, not really doing much, slowly maybe pushing higher a little bit here, but overall the structure is definitely constructive after the market took out 110 and 112 this year, with a focus now on an eventual push up beyond 116.24, that recent 2017 high from September, exposing that critical barrier at 120 further up. Remember, 120 was a floor for this market going back to ahead of January of 2015 before the market collapsed down below that barrier. So a break above 116.24 will open a continuation of gains here up towards 120. Setback should now be very well supported into the 112 area. Aussie dollar. So Aussie has seen a bounce in recent trade out from some support at 77.34, but overall it does look like this market is more topping out than anything else in 2017 after putting in a plus 2-year high above 81 at 81.26 back in early September. The market right now is going to need to focus on maybe putting in a lower top here and a break back below recent support at 77.34, which would expose a drop down towards the 75 area. Ultimately, only a close now back above 80 would compromise this more bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has seen some consolidation over the past several sessions, but overall this consolidation right now is viewed as a bullish consolidation as the market looks to extend its correction out from those plus 2-year lows down ahead of 120 at 120.62. There's room for a more significant correction after we'd seen such a sharp decline in 2017 back up towards, at a minimum, the August peak, which came in at 127.80. Only back below 123 here would delay this outlook. Kiwi dollar. So the New Zealand dollar has been showing signs of topping out in 2015 since putting in that 75.58 plus 2-year high. The market has since put in lower tops and lower lows, and so this latest bounce is expected to put in another lower top ahead of the next major downside extension here below the recent lows at 70.56 and towards 68.18, that 2017 low further down. SPX 500. The S&P 500 has not changed its tune here, with the market continuing to push up to fresh record highs. It's interesting though here, if we consider a recent move in this market from highs that were seen up around 24.90 to lows that were seen down to 24.16, that move that was seen, that was a 75-point move. If you project that to the top side, it takes you up to 25.65. So we're there right now, and it'll be interesting to see if that measured move that was reached at 25.65 offers any level of resistance from now a short-term market that is certainly extended as well. And we're looking at a S&P 500 at record highs, but that is extended across all time frames, monthly, weekly, and now daily again. And so it'll be interesting to see if there's any form of reversal that takes shape over the coming sessions. Very short-term support for this market comes in at 25.40 about, but we'd need to see a close below there on Thursday to suggest that the market is maybe taking a little bit of the pressure off the top side, but really we need to see a breakback below 24.87, the low from the 25th of September, to alleviate topside pressure. If you want to talk about a more significant reversal in this market, we would need to take out support at 2400. Gold. So gold has seen some setbacks in recent trade, but overall, as we've highlighted, this is a market that continues to be exceptionally well supported on dips over the past several months. And so look for this latest dip potentially at 1260 to now be supporting in favor of that next major upside extension here back above the 2017 high around 1357 and up towards and through the 2016 peak at 1375.